With whales quietly accumulating Pepe while retail traders pull back, can Pepe finally break free from this downtrend? So if you have any interest in Pepe or you hold any Pepe coins, then you need to see this. So what is the latest Pepe news? And how will all of this affect the value of Pepe?
In today's video, I will be answering these questions, and I'm going to be telling you all of the new price boosting information that has just come out about Pepe coin and how there is still a high possibility you could become a millionaire from Pepe. I have put a lot of research into this video, so make sure you watch the entire video to not miss out on any price boosting information. Welcome to Crypto Hype, your daily dose of crypto. If you are interested in everything around crypto, this is the place for you. Subscribe if you want to stay updated with all the crypto news, predictions, and stay one step ahead in the crypto world. Make sure to hit the like button for us to provide you with cryptocurrency news. Also, just before we go any further, this channel has a daily giveaway of 1 million Shiba tokens. To enter, all you have to do is be subscribed to this channel, like this video, and comment hashtag Shiba Inu. Good luck.
But before we get to our topic, let's take a look at the chart and see what the price of Pepe is doing on the 17th of March, shall we? Pepe's price today is around 658 units. With 5 zeros, Pepe's price is down 7% in the last 24 hours, with a 24-hour trading volume of $593 million. The token also currently has a market cap of over $2.7 billion, ranking it as the 42nd most valuable cryptocurrency. Please keep in mind these prices might have changed by the time you watch this video, and this content is not financial advice. So let's not waste any time and get into it. Before we get to Pepe news, we must cover the biggest news stories in the general crypto market first. Ethereum. As whales buy and retail pulls back, will it remain below $2,000? Ethereum is currently navigating a period of calm, caught between whale conviction and retail hesitation. While large holders continue to lean long, retail traders appear to be pulling back, with recent deleveraging narrowing the long-short ratio to just 3. This tightening of positions reflects broader market indecision. Volatility has dropped, and so has the appetite for risk. As momentum stalls, Ethereum's price action is entering a holding pattern, testing the patience of traders on both sides. Whales leaning toward long positions. The latest whale vs. retail ratio chart shows a notable uptick in whale long positioning for ETH since late February. While the ratio peaked around 1.55 during a sharp move above 2,600, it has since stabilized between 1.3 and 1.4, even as Ethereum's price fell back toward 2,200. Whales are staying above the 1.3 mark, higher than the 1.15 average across crypto assets. This suggests they remain optimistic or are quietly accumulating in anticipation of a future move. The chart reflects a classic divergence. Whales are buying the dip while retail hesitates. This behavior often precedes directional shifts in market momentum, either a breakout backed by institutional support or prolonged compression if retail stays sidelined. Retail deleveraging and the narrowing long-short ratio. Retail traders, once confidently positioned for upside, are retreating. The retail long-short ratio for Ethereum, which reached highs above 5.5 in early March, has steadily declined to around 3, pointing to clear deleveraging. As volatility faded, so did retail enthusiasm. The ratio's decline toward 3 suggests that a significant portion of retail traders are closing positions or adopting a more neutral stance. Compared to late February, when the ratio hovered around 2.5 and climbed with price momentum, this recent pullback signals fading conviction among smaller holders. While this reset may be healthy, unwinding overly aggressive longs, it also highlights the lack of fresh demand from retail participants. Market neutrality and trader fatigue. Taken together, these trends paint a picture of broad market neutrality. Whales are buying, but cautiously. Retail isn't bearish, just disengaged. For many traders, especially in perpetual futures markets, this low-action environment is frustrating. Conditions are neither bullish enough to justify aggressive longs, nor bearish enough to warrant meaningful shorts. ETH's price has mirrored the broader decline across crypto assets, as seen in both charts' red dotted lines, reinforcing the view that this isn't an Ethereum-specific lull. It's part of a wider market cooldown. Still, such neutrality often precedes volatility expansion. The market is coiling. The only uncertainty is the direction. Ethereum price outlook. Ethereum is showing signs of stagnation just below 2,000. The RSI hovers at 35, keeping ETH in bearish territory without being deeply oversold, suggesting limited upside momentum in the short term. Meanwhile, the OBV continues its downward trend, signaling weak buying pressure despite recent price consolidation. The declining volume and muted RSI hint at a continued sideways grind or a minor pullback unless buying activity picks up. For now, Ethereum lacks the technical strength for a breakout. Without a clear catalyst, ETH is likely to remain range-bound between 1,850 and 2,000. If you are still watching, it would be massively appreciated if you could go ahead and smash the like button. It costs nothing and really helps support the channel. Also, keep watching to find out the latest Pepe coin news. Pepe's market outlook. Can it finally escape the meme coin sector's collapse? Pepe, at the time of writing, had bounced by 35.2% in just 4 days. However, its daily chart revealed that a downtrend was still in play and dominant. In fact, it faced a 75.1% drawdown from its December highs. Worth noting, however, that the crypto market as a whole has suffered significant losses in the last 3 months. The meme coin sector has been one of the worst performing ones in recent months. It has shed 87.5 billion since 9 December, a 63% reduction. In light of the lack of significant bidding in the market, here's why investors can have a little bit of hope in Pepe's recovery. Pepe holders decide, accumulation or capitulation time? The balance on exchanges saw a relatively flat trend throughout 2024. Towards November, as the price began to rally higher, the balance on exchanges began to trend lower. Since then, this downtrend has continued, even though the price has also been in a free fall. This hinted at hodl behavior from investors. Holders were withdrawing their Pepe and placing it in cold storage. While this accumulation can be seen as a bullish sign, so far it has done little to halt the price's decline. The spent output profit ratio divides the realized value of the spent outputs, price at which coins were sold by the value at which they were acquired. Values above 1 indicate holders are selling at a profit, and values below 1 signal sales at a loss and bearish sentiment. Since early February, the SOPR has been below 1, a sign of capitulation among holders. This steady sell pressure forced Pepe to make a series of lower lows. This trend might not reverse itself until Bitcoin does, and Pepe records extraordinary demand. The MACD was below 0 and showed the momentum was predominantly bearish. The market structure was also bearish, and has been this way since late January. The OBV was in decline over the past 3 weeks, but hovered around its early February lows at press time. Overall, the sellers were dominant. However, the falling Pepe balance on exchanges may be a glimmer of hope for investors. It is unlikely to be enough to reverse the downtrend, but it's still a start. But this isn't the only big news in crypto recently. If you want to find out the best crypto to buy now, then click the video on screen now. Trust me, you do not want to miss out on these 1000x potential altcoins.